All right, so let's check out this post on Reddit. So this person is losing their mind over dual tax situation. When everything fails, there's always Reddit. Gotta love that. So I'm a dual citizen, German US, I've filed my tax returns until 2022 while being employed by a German company, living in Germany. At the end of 22, moved to New York to become a freelancer in art consulting. Sudden career change coincided with the loss of my CPA. Ended up not filing taxes in either country. What started out as small consulting jobs turned into bigger projects. I founded a GmbH in Germany and an LLC in the US. While starting to operate the companies, I realized that I urgently need to work with a new tax setup. Mix of fear, spent a lot of the money I made, and shame for not having tackled this problem earlier. On top of that, I started approaching some professionals who I found just by looking for expat help on Google. Most of them were at capacity or seemed to shy away because of the complexity of my situation. On the other hand, I don't make enough money yet to hire a big accounting firm with a worldwide setup. So let's see. What I'm thinking, since I do most of my business here and reside in the US, is it not possible to hire a CPA in Germany who files my returns on personal and corporate level and then feeds that to a CPA here in the US who reports on a worldwide basis, or both? Finding someone who knows both feels almost unattainable. Yeah, so this person, basically what they're looking for is somebody that can help them with the US tax side and the German tax side in a perfect world. Somebody that knows everything and can just give them the answer of what's the best answer, do their German taxes, do the US taxes, all under one roof. It's not even necessarily what you want, because somebody that claims to know multiple countries' taxation levels at the experience level that you need is unlikely. And to me, it raises a question mark as to whether I actually believe that, because it's complicated. It's hard to know one country, much less multiple. What we do is we have advisors that we have vetted and know personally in a lot of different countries, Germany being one of them, where we can reach out to that person, and basically it's a coordination event. I know that they know the German tax law and can tell me what the best answer is for this person in Germany, and I can tell them what the best answer is for this person in the US, and then we put all that together to make sure that we can match it up using the tax treaty between two countries. So this person lives and works in the US. They set up a GmbH, which is like the German version of an LLC, and an LLC in the US. So there's a lot of missing information there that we need to figure out, like why do they have both companies? Is it necessary from a business perspective, like a client-facing perspective, that the GmbH is billing and invoicing and client-facing to people in Europe and Germany, while the LLC is doing the business in the US? My suggestion for people like this is don't set up companies in multiple countries unless it has a specific business benefit that is necessary to operate that business, because there's no tax advantage. There's no tax advantage to having the GmbH and the LLC. It just complicates things, as this guy's finding out. So if he lives in the US and he's planning on staying here, my suggestion is just have the LLC. And in my experience, you're able to have the LLC be the client-facing organization for people globally. For example, my LLC works with people outside the US, and that's not a problem. So that would be my first suggestion. Keep the LLC, get rid of the GmbH. If you need the GmbH, the important thing is that you're clearly separating what the GmbH is doing from what the US person is doing. The GmbH defaults to a foreign corporation for US tax purposes. So now you have a controlled foreign corporation, you're dealing with GILTI rules, CFC tested income rules, which means you're going to pay tax in the US on the income earned from that German company, regardless of whether you take the money out. Controlled foreign corporations get complicated. Making the check the box selection makes things simpler, but also the big thing we want to avoid when you have somebody in the US with a non-US company is that you're not subjecting that non-US company to US taxation where it has to file its own return. For example, if you leave the GmbH as a foreign corporation, but the owner and operator is in the US, now foreign corporation is doing business in the US. So you have GmbH filing a US tax return, US person filing a US tax return for the LLC, and it just becomes a jumbled mess and very inefficient. So check the box here at the GmbH level, flows down here to the US individual. You're going to have foreign tax credit in the US for the taxes paid in Germany. LLC is just going to be a US taxpayer. Everything's real simple in that scenario. So that's generally the way that I would advise with this guy. But of course, the devil's going to be in the details. We need to understand, for example, how much time is he spending in Germany? Because we don't want the same thing to happen on the German side, where the LLC could be subject to German taxes. So we really need to know more of the facts. But my suggestion is it's always a balance between simplicity and savings, or tax savings. I guess if you're going to overcomplicate something, make sure that the benefit is there that outweighs the complexity that you're creating with the additional entities and things like that. Otherwise, keep things simple. Make sure that you're at least tax neutral and you're not paying more tax than you should. And that's the best way you can go about it. And then just get back to doing business and what you're good at.